The European Union, an economic and political union of 27 member states, has faced a series of crises that have tested its foundations. From economic downturns to political disagreements, the EU's resilience has been challenged time and again. Now, as global economic uncertainties grow, the question is whether the EU can withstand another major economic shock. Let's dive deeper into this complex situation. To understand what might happen in the next crisis, we first need to look back at how the EU handled past economic turmoil. The 2008 financial crisis is a perfect starting point. It was a global event that left no economy untouched, but in Europe, the impact was severe and long-lasting. Banks failed, government budgets were strained, and unemployment soared, especially in southern Europe. Countries like Greece and Spain became symbols of economic despair. Riots in the streets of Athens and Madrid highlighted the deep pain caused by austerity measures. In response, the EU orchestrated large bailout programs, but the process was slow, and political divisions over the right path forward became painfully visible. The rescue efforts led to the formation of key economic mechanisms, like the European Stability Mechanism, ESM, a financial firewall to protect countries in distress. This move was meant to reassure markets and stabilize the Eurozone, but it also required stricter financial rules. Countries that received aid had to implement tough austerity measures, cutting public spending, reducing pensions, and raising taxes. These moves were controversial, leading to political backlash, social unrest, and a loss of trust in the EU in some quarters. Then came the Eurozone debt crisis, which was essentially a domino effect from the 2008 collapse. Greece, Italy, Portugal, and Ireland faced spiraling debts, risking a potential breakup of the Eurozone. The EU intervened with more bailouts, but this time with stricter conditions. While the crisis was eventually contained, the scars were deep. Trust between Northern and Southern Europe was damaged, and the question of solidarity became a hot topic. The stronger economies of the North were reluctant to continuously bail out their southern neighbors, leading to tensions that remain today. Now let's shift to the present. The COVID-19 pandemic was a wake-up call for the EU, exposing weaknesses in both healthcare systems and economic readiness. Lockdowns caused economies to shrink drastically, and the EU had to step up with unprecedented financial support. The €750 billion recovery fund, financed by joint debt, was a significant step towards solidarity. It marked a move towards more collective action, with the aim of supporting the recovery of member states hit hardest by the pandemic. This was a bold move for the EU, showing a willingness to adapt and evolve. However, it also brought challenges. Debates over how the funds should be distributed, monitored, and used became heated. Some countries demanded stricter oversight to ensure the money wasn't wasted, while others called for greater flexibility to address local needs. Even as the EU navigated the economic fallout of the pandemic, new threats emerged. Inflation surged, driven by a combination of supply chain disruptions, increased demand, and rising energy prices. Energy dependence became a key concern, especially with the ongoing war in Ukraine. Many EU countries relied heavily on Russian gas, and sanctions on Russia have caused prices to spike. Some countries are struggling to keep energy affordable, which puts additional pressure on their economies. The transition to green energy, a key EU priority, has become both a challenge and an opportunity. Investments in renewable energy could reduce dependency on external suppliers, but the transition requires massive funds and political commitment. So what does the future hold? On one hand, the EU's economic toolkit has expanded significantly. The European Central Bank (ECB) has more tools at its disposal, from interest rate adjustments to quantitative easing. The ECB's role in stabilizing the Eurozone is stronger than ever, and its actions are critical in managing inflation and supporting economies in distress. The EU also has mechanisms like the Next Generation EU, aimed at funding sustainable projects and driving innovation. The European Green Deal promises to transform the economy, making it more resilient and future-proof. These are positive signs that the EU has learned from past crises and is better prepared to handle the unexpected. Yet, the EU's structure remains complex. Decision-making in the EU requires agreement among 27 countries, each with its own economic realities and priorities. This can slow down responses in times of crisis, leading to a sense of inertia when fast action is needed. The risk of political fragmentation is real, with populist and nationalist movements gaining strength in several countries. These movements often oppose deeper EU integration and call for more national control, which could make collective action during a crisis even more difficult. The tension between economic unity and national sovereignty is a constant balancing act, and it's unclear how this will play out if a severe economic downturn hits. The question of the euro also looms large. A single currency binds the Eurozone together, but it's a double-edged sword. Without individual control over monetary policy, countries can't independently adjust interest rates or devalue their currencies to respond to local economic issues. This limitation was evident during the previous crises when countries like Greece struggled to recover without the tools available to nations with their own currency. The European Central Bank can provide support, but the one-size-fits-all approach doesn't always suit every economy in the bloc. Some economists argue that the EU needs a deeper fiscal union, where budgets and taxes are more centralized, to make the euro work in all conditions. Others suggest that flexibility, allowing countries to tailor policies to their unique situations, is the better approach. Another factor to consider is external pressure. Europe is not isolated from global economic shifts. A slowdown in major trading partners like the United States or China, geopolitical tensions, and trade disruptions could all trigger economic stress in the EU. The rise of new economic blocs and shifting alliances might challenge Europe's position on the global stage, forcing the EU to adapt quickly to maintain its influence. Trade policy, energy security, and defense spending are becoming more intertwined with economic decisions, and the EU must navigate these waters carefully. The EU's long-term stability might also hinge on demographic changes. Aging populations, particularly in southern and eastern Europe, could put additional pressure on social welfare systems, healthcare, and public finances. Younger generations are crucial for economic growth, but many are leaving struggling regions for better opportunities elsewhere, leading to a brain drain in some areas. Addressing these demographic challenges requires bold policies in education, innovation, and labor mobility, issues that often become contentious in EU negotiations. In the end, the EU's fate in another economic crisis will depend on its ability to act decisively, balance national and collective interests, and find a common path forward. It's not just about financial stability, but about political will and a sense of shared destiny. Can Europe's leaders rise to the occasion and steer the continent through another storm? Or will divisions deepen, putting the very concept of a united Europe to the test? The stakes couldn't be higher. The EU's success or failure in navigating future crises will not only shape the lives of millions of Europeans, but also influence the global economy and geopolitical landscape. If the EU thrives, it could emerge as a stronger, more cohesive force, capable of leading in an uncertain world. If it falters, the consequences could be felt far beyond its borders, signaling a shift in global power dynamics. As we look ahead, one thing is clear. The EU's story is far from over, and the next chapter may well be the most crucial yet. Whether it's a tale of resilience or a cautionary story of decline, only time will tell how the European Union faces the challenges that lie ahead. For now, the world watches, waits, and wonders. Can the EU survive another economic crisis, or is it standing on the brink of a new era?